Kia ora, I'm Mary Jo, Kiwibank economist. So the New Zealand economy recorded a massive 2.8% jump in activity in the June quarter. The jump in GDP was driven by the service industries, but growth really was broad-based in the quarter, with the primary and goods-producing industries also making decent gains. There were no major COVID outbreaks during the June quarter, which meant fewer COVID restrictions, and that allowed economic activity to continue largely uninterrupted. The opening of the Trans-Tasman travel bubble also helped to boost growth. In fact, the export of services spiked by 63% in the quarter alone. Now, the GDP report is old news, and we're far more interested in the quarters ahead. But the report ultimately confirms the strength of the New Zealand economy heading into this latest lockdown. Now, because of this lockdown, we're expecting economic activity to fall by around 7% in the September quarter. Now, that's definitely a large drop, but it's not as bad as the 10% drop we saw last year. And that's because businesses in general seem to have adapted to life in lockdown, many of which had shifted to online. Level 4 was also much shorter than last year for regions outside of Auckland, and the government has once again rolled out policy that we know has worked in previous lockdowns, like the wage subsidy scheme. Looking at the high-frequency data, there are early signs that the economy is holding up relatively well. Now, not only are we expecting a shallower drop, but also a speedy rebound in the December quarter. We're expecting economic activity to rebound by around 8.5% in the fourth quarter. Now, so long as lockdowns are part of the playbook, these swings in GDP are expected. If you lock up the economy, activity falls. When you reopen the economy, activity should pick up again. Now, one final thing to note is that locking down the economy does come at a cost. Prior to this lockdown, the economy had returned to 2019 levels, but was still sitting below the pre-COVID growth trend. Had COVID not happened, the economy would be around 0.8% bigger today. Now, this latest lockdown will add to that economic scarring, but again to a lesser extent than last year's lockdown. That's it from me this week. Talk to you in the next one.